Good morning. This is Peter Milios from the Finance News Network. Stocks rose on Friday as investors digested that bank earnings and bet inflation would ease in 2023. All of the major indexes fought their way into the green after beginning the day deep in the red. The Dow Jones Industrial Average rose 0.33%, the S&P 500 rose 0.4%, and the Nasdaq Composite advanced 0.71%. The S&P and Nasdaq each posted their second consecutive positive week and best weekly performance since November. The tech-heavy Nasdaq was the outperformer for the week after rising 4.82%. The S&P 500 sectors were mostly mixed on Friday, with consumer discretionary, financials and materials leading the pack, closing 0.97%, 0.71% and 0.67% higher, whilst real estate was the worst performer, closing 0.61% lower. Bank earnings weighed on equities to start the day, but sentiment reversed as investors appeared to shrug off negative news that was expected to some degree, according to Ross Mayfield, investment strategy analyst at Baird. Financials weren't really expected to have a blockbuster quarter, he said. It's just providing a bit of sentiment wave, and since the bank's leading earnings seasons, they can kind of set the tone for how investors look at the broader picture. Wells Fargo, whose profit for the last quarter had been cut by half, said it's preparing for the economy to get worse than it's been over the last few quarters. JP Chase posted revenue that beat expectations, but even so, the bank warned it's setting aside more money to cover credit losses because a mild recession is its central case. The bank posted $2.3 billion provision for credit losses in the quarter, a 49% increase from the third quarter. And Goldman Sachs, who last week stated that it would let off 3,200 staff members, or roughly 6% of their US workforce, have stated that its consumer lending business has lost about $3 billion since 2020, revealing for the first time the costly toll of Wall Street's giant Main Street push. Elsewhere, Delta Airlines reported earnings and revenue that beat estimates for the final quarter of 2022. However, the stock slid 3.5%. Investors have been awaiting these results to gain more insight into the health of the economy. Whilst in the crypto space, massive leading cryptocurrency platform Crypto.com announced on Friday that it is cutting a whopping fifth of its global workforce, in a second round of layoffs in 6 months after a plunge in the value of many cryptocurrencies and the collapse of rival FTX. Interestingly, this has seemed to have very little impact on the price of major cryptocurrencies like Bitcoin and Ethereum so far, whose prices have increased by roughly 18% and 15% over the past 5 days. In economic data, the University of Michigan Consumer Sentiment Survey showed their one-year inflation outlook down to 4%, the third straight monthly decrease and the lowest level since April of 2021. That followed December's CPI report, released Thursday, which showed prices declined 0.1% over November, whilst prices rose at 6.5% pace compared to the previous year. The results heightened hopes that the Federal Reserve may soon slow its hiking. However, despite the signs that inflation has started to recede, economists still expect higher interest rates to push the US economy into a recession in the coming year, according to the Wall Street Journal's latest quarterly survey. On average, business and academic economists surveyed put the probability of a recession in the next 12 months at 61%, little change from the 63% figure from the survey conducted in October. Both figures are historically high outside actual recessions. The SPY futures are pointing to a 0.5% gain. Thank you for listening.